Hey Bitcoiners, Lockie here from Edge21. Today we're diving into Bitcoin's recent price movement as it's been a turbulent time in the market. From highs above 81k to a sharp drop to 75k, Bitcoin's performance has been largely shaped by broader economic factors. We'll explain what triggered the sudden change, what's driving the market right now, and what Bitcoin's next move might look like. Let's take a deep dive into the latest developments. Bitcoin has taken quite a hit lately. As we've seen, the price dropped from the mid 80,000s to the mid 70,000s. While this might seem like just another dip, the reasons behind this drop go beyond typical market fluctuations. This time it's directly linked to broader economic events, specifically US President Trump's new tariffs, which have shaken both traditional markets and the crypto space. Let's break it down. On April 7th, Bitcoin, like many assets, saw a significant decline. The trigger? A new round of trade tariffs imposed by the US government. These tariffs have sent shockwaves through global markets, causing a massive sell-off. The result? A $246 billion loss in the total cryptocurrency market, with Bitcoin taking the brunt of that hit. Now, what does this mean for Bitcoin's price? Well, the tariffs led to a classic risk-off environment. And what's that, you ask? It's a term used to describe a market sentiment where investors are fleeing risky assets like stocks and cryptocurrencies, seeking traditionally safer investments such as bonds or gold. As the fear of a global recession grows, driven by these tariffs, both traditional assets and Bitcoin experience significant losses. Bitcoin, which is often seen as a store of value, hasn't been immune to these market dynamics. Take a look at this chart. You can see Bitcoin's sharp price drop from around $82,000 to $75,000. This sharp decline mirrors the broader market sell-off triggered by the tariffs. If you closely follow the price action, you'll notice Bitcoin quickly dipped below key support levels, only to slightly recover and stabilize just above 79,000. So what's the big deal with these tariffs? Let's zoom out and look at the bigger picture. President Trump's tariffs have sparked fears of a global economic slowdown, pushing both traditional markets and cryptocurrencies into decline. When these tariffs were announced, the global economy braced for a domino effect. Higher inflation, disrupted trade relations, and slowed economic growth. Investors began to worry, leading to the risk-off sentiment we're seeing today. As we dig into Bitcoin's current market phase, the Mayer's multiple chart is telling. This chart shows that Bitcoin is currently trading within a historically normal range. It's not surprising, considering the market is still digesting the tariff news and investor sentiment is still cautious. While Bitcoin did experience a drop, the price movement is consistent with what we'd expect in times of high volatility, market corrections, but not panic. Now let's talk about Bitcoin's price trend in the short term. Bitcoin has been caught in this broader global sell-off, but what's interesting is that it has shown some resilience. Despite the recent losses, Bitcoin's market dominance still holds strong at 62.71%. And this is a clear sign that Bitcoin continues to lead the charge in the crypto world, holding up better than altcoins, which have taken an even harder hit during this downturn. Here's another graph thanks to Check on Chain, the MVRV ratio, which shows that Bitcoin's market valuation is still well within reasonable limits. Although we're seeing unrealized losses in the market with 8.5% of the market cap in the red, this isn't anywhere near the level of panic seen in previous bear markets. If you compare this to the 2021 bear market, where unrealized losses hit 20%, you can see that the current downturn is more measured. It's a significant correction, but not an all-out collapse. Looking at the support levels, we're seeing some important price zones where Bitcoin could stabilize. The 75 to 70k range is crucial. This price zone marks a key point where Bitcoin has previously found support during corrections. If Bitcoin drops further below these levels, we could be looking at the 65k range, which is a major psychological level for Bitcoin. If Bitcoin tests that level, expect heightened fear and potential panic selling, but also remember that it could signal the market bottom, where buying opportunities may arise. Now, a key factor we're watching closely is leverage in the Bitcoin futures market. Look at this chart showing Bitcoin futures liquidation volumes. As the price dropped, we saw a sharp spike in liquidations, especially among traders using leverage to bet on rising prices. This forced many traders to exit their positions, amplifying the price decline. Liquidations like these are often a sign of panic, and historically, they tend to mark the end of a price downtrend. So while the short-term outlook is uncertain, the liquidation pressures could create the conditions for a potential recovery. Finally, let's talk about the outlook. With global markets on edge due to the ongoing tariff war, it's likely that Bitcoin will continue to be influenced by broader macroeconomic factors. The key thing to watch is whether Bitcoin can hold the 75k support level in the coming days. If it does, Bitcoin could be positioned for a rebound once the tariff fears begin to subside. If it falls through that support, we could see a further retracement to 70k or even 65k, but these levels may present buying opportunities. So there you have it, a closer look at the recent Bitcoin price drop and what's driving the market right now. The tariffs imposed by President Trump have undeniably shaken up the global market, triggering a significant sell-off. But Bitcoin's resilience and its market dominance give us hope for a potential rebound. Where do you think Bitcoin is headed next? Let us know in the comments below. Stay tuned to Edge 21 for more insights and updates as we continue to track Bitcoin's price movements. If you're stacking sats and stacking knowledge, please subscribe, like, and share this video. I'm Lockie McWilliam signing off. As always, thanks for watching. Stay strong and hodl on.